Hi, everyone, and welcome to the week ahead. I'm Tony Nash, and today we're joined by Michael Cow. Michael is Urban Cowboy on Twitter. He's an ex-hedge fund manager, and now he's a private investor. We're also joined by Marko, who you're well familiar with, and Ralph Schoellhammer, who is at Webster University in Vienna, and he's a political economics expert. So before we get started, I want to talk about our Friends of Tony promo. So I have more than one friend, so it's plural, Friends of Tony promo. So CI Futures is our markets forecasting platform where we forecast about 800 items every month. We do currencies, commodities, and equities every week, every Monday morning. And we do the top 50 economies, economic variables once a month, where we do show our error rates there. So that is what distinguishes us from other folks. There is accountability, and you don't have to guess about our previous performance. We're having a promo. The coupon code is Friends of Tony, plural friends. It's $19.99 per month for a 12-month subscription. It's for new subscribers only. We're only doing it for the first 25 people who come in. So please make sure you get on this right away. Please go to completeintel.com/pricing. And we hope you subscribe. So, guys, thank you for joining us. We have a few key themes this week. First, Michael's written quite a bit about the dollar and about the kind of economic warfare happening now between the US and China. So we're going to take the other side of his typical argument and look at what kills the US dollar. We're going to talk to Albert about dollar strength. He made a statement about the dollar going to 112 with some turbulence, so we're going to dig into that. And then Ralph is going to talk us through inflation's hold on Europe. So should be a really broad macro conversation for us today, which I'm really looking forward to. Mike, you did recently attend this symposium on the great power competition with China I think it was at West Point, and you spoke about US dollar primacy and an era of economic warfare, which must have been great. I missed my invite, but it must have been a great discussion, and I think we're all pretty jealous. I assume that much of the presumption or fears about the Chinese Yuan, right? Is that kind of what the basis was of this?
Well, I think that, yeah, I think generally when people are talking about threats to the U.S. dollar system, right? The most glaring contender is the Chinese Yuan,
Right.
given all the scaffolding that they're setting up with 60 plus odd bilateral swaps around the world,
Sure.
and one belt, one road, and all this stuff, right? But
Yeah.
anyways, if you want, I can go. I first of all, I love the fact that you're forcing me to steelman the counter argument against my own thesis, which is
Good.
great.
Great.
Yes, so
So
let me.
you've talked
You
about the U.S.
yeah.
dollar wrecking ball, right? And
Yep.
you've really talked a lot about how the dollar has really kind of hurt some emerging markets. So I do have a chart of USD CNY, and we've seen the volatility of the CNY over the past really 5 years, 10 years. And part of my concern about the CNY is the PBOC. And we can talk about that in detail. But I'd really like to hear, what do you think if the dollar was displaced? How would that happen? And we could spend days talking about this, but I guess in a summary conversation, how would that happen? And what would be a potential other store of value that would be accepted globally?
Okay, so I was going to answer this question on different time scales, right? There's short
Okay.
term and there's longer term, but I believe where you're going with this is a longer term time scale, like what ultimately displaces the dollar as the global reserve currency, right?
No, wait, we can talk different time scales. I actually think that's very interesting.
All right. Well, so look, let me dispense with the easy part first, which is the shorter time scale. I think I've been saying for a while now that I don't necessarily think that we've seen the cyclical top in the U.S. dollar in the short term, just because I don't think any of the competing regional blocks can outhawk the Fed. Or conversely, I don't think the Fed is going to be in a position where it's going to outdove the rest of the world either, right? So either of those scenarios tell me that I think the U.S. dollar is probably going to resurge, and so obviously the counter to that, what would have to happen for that not to happen? Well, I think that the U.S. economy would have to suddenly take a turn for the worse and be in a much worse spot than the rest of the world, and the rest of the world would basically be able to become much more hawkish vis-a-vis the Fed. I see the exact opposite playing out in the short term. Okay, so now longer term, and this is basically the topic of my paper, right? So I think longer the premise of my paper is that this notion that Bretton Woods was basically this top-down construct that it foisted a Trojan horse mechanism on the world where, hey, everybody, come use the US dollar because we're going to be convertible to gold. And then all of a sudden in 1971, Nixon shocks the world and takes that gold tether away, but it's too late. Everybody is stuck using the dollar. I call bullshit on that thesis because if you look at the rise of the euro dollar banking system, it started happening probably 15 years before that. And
he was actually very popular when he did that, right?
Well, it started happening, by the way. It started happening. The real catalyst to it, first, it was the failure of the tripartite agreement after World War II, right? Which tried to stabilize the franc and the pound and the dollar exchange rates. But then in 1957, when Britain basically, in a domestic fight against inflation, surprise, surprise, they basically instituted capital controls. So there was a tremendous global need for a liquid reserve alternative, and so the world actors on the world stage organically flocked to the U.S. dollar. And so the premise of my paper delves into what are, if trust in the dollar already went well beyond its gold backing back then, right? What lent that trust? And so our paper posits that it rests upon national power. It's a bedrock of national power. And I focus on three economic pillars of national power. Geography, which informs everything, but then geography also informs a country's access to its natural resources and its industrial capacity. So in our paper, we talk about how, look, the U.S., it's well known that the U.S. is very, very naturally endowed with geographic assets that are really unparalleled in many ways, and China is short a lot of those assets. However, because we have a federalist capitalist system, right? China is using essentially economic warfare to target that as a vulnerability, right? So they have unfairly competed and stolen IP in the world of semiconductors, right? They're trying very hard to replicate Taiwan's success with TSMC. Fortunately, the U.S. Controls critical choke points in that industry still, but yet in that area at least, the U.S. is finally starting to come around and make some very specific targeted export controls as well as changes to its industrial policy. So the point here is that we in that area alone, the U.S. is starting to recognize the importance of reshoring and defending our flank from an industrial policy perspective. But when you compare and contrast that to oil and gas, which is the other critical supply chain, where the U.S. is currently the leading oil supplier in the world, and we are naturally long that natural resource. But because of blind devotion to ESG adoption and this erroneous assumption that an energy transition is going to follow Moore's law dynamics, where when it won't, right? is going to leave us in a very dangerous lurch. So I point out that there's a real inconsistency there, where we're kind of shooting ourselves in our own foot when it comes to energy policy. So to answer your question, what has to happen for the U.S. to really lose its status? I started thinking. I said, well, number one, okay. Oh, the other thing is, much ado has been made of the U.S. weaponization and the criminal seizure of Russian reserve assets and whatnot. Okay, well, look, I also point out in my paper that yes, that should be a shot across the bow for U.S. policymakers, because like the situation in the 1950s, right, it certainly creates an incentive for our adversaries to look for an alternative. But what are the alternatives? Because if you look at the Eurozone, the yen, the pound, the euro is frankly the most successful challenger to the dollar to date. And yet, since its inception in 1999, U.S. share of FX reserves has stayed constant at 60%. It's the euro that's actually lost share. Now, the Chinese yuan, here's the problem. What has to happen for the yuan to supplant the U.S.? Number one, China would have to prove that it will be a better benefactor and more trustworthy sort of steward of the global commons than the U.S. I don't see that happening in almost any circumstance.
So let me ask you, just in that, what allies does China have? Like, if China were to say, okay, boys, we're going to war, line up and let's form a coalition, who would China's allies be? CI Futures is our subscription platform for global markets and economics. We forecast hundreds of assets across currencies, commodities, equity indices, and economics. We have new forecasts for currencies, commodities, and equity indices every Monday morning. We do new economics forecasts for 50 countries once a month. Within CI Futures, we show you our error rates. So every forecast, every month, we give you the 1 and 3 month error rates for our previous forecasts. We also show you the top correlations and allow you to download charts and data. CI Futures is available for $50 a month, $75 a month, or $99 a month. You can find out more or get a demo on completeintel.com. Thank you.
Well, that's a really good question, because
Pakistan and North Korea?
well, yeah, those are the two, right? And perhaps Iran, right? But like Russia, it's interesting because China's relationship with Russia over decades and centuries, and even centuries certainly, right, has been kind of a storied one, right? I wouldn't say that that this dragon bear bromance is necessarily that chummy, because look, China is really happy that it's getting big discounts to Russian Urals, right? And that's directly counter to Russia's interests. So I think this whole notion that they're right now they share a common interest in wanting to counter the US's hegemony, but that is a very, very fragile bromance, to say the least. The other thing I was going to say is that the other thing that would have to happen for the U.S. to see dominance, I think, would be that the U.S. willingly essentially becomes a vassal state to China and allows China to roll over basically our interest in the Indo-Pacific, allows that the U.S. allows China to take over Taiwan, and we just roll over and do nothing. I guess in a parallel universe that could happen. I'm not seeing that happening. You know, I think that China's significance alone, not just as an unsinkable aircraft carrier potentially for China if seized, given its geostrategic position in the first island chain, but obviously, you know, Taiwan Semiconductor is alone is of critical significance. So
let's also, just to take the other side of that for a minute. You know, let's also be very aware that, you know, the wars that the U.S. has lost over the last 80 years have really been to China in Korea, to China in Vietnam, right? And so, you know,
we didn't lose those wars, Tony. Our military objectives were all met. We're confusing the political component that came in afterwards.
We lost those two wars. I mean, we had to negotiate the settlement, and the U.S. lost those two wars. So, you know, the only people the U.S. has really lost to over the last, you know, 100 years is the Chinese. And so, you know, I do sit with you and with Albert in terms of if things were to happen, you know, would the U.S. prevail? I actually think they would. I don't think it would be a cakewalk, and I do think there are some scars there in Asia, right? And it's
you have to. I think you have to compare and contrast that to where the U.S. was in World War II, like where when Britain lost its hegemony, when the pound lost its hegemony, is because, you know, the UK was in a very, very tough spot. It had essentially bankrupted itself after World War II and was completely beholden to the U.S. The U.S.'s Lend-Lease program, right? So the U.S. essentially had all the cards. Now here, the two wars that you talk about, I agree with Albert. It's not even close to the same thing. We withdrew, and it wasn't a great withdrawal, but it wasn't a situation where you know, we had essentially bankrupted ourselves, and, you know, we were completely dependent on the largesse of, you know, somebody else, right? So
you know, if I can interject, Michael, I don't. We can go on and on about this.
Yeah.
I mean, to go back to Tony's question of what would come next. I mean, theoretically, the United States would have to have some sort of societal breakdown. Our rule of law would have to break down, and we'd have to become a non-interventionist nation. We wouldn't be able to protect our interests globally. At that point, something could come along to dethrone the dollar. But even if we're at that point, I think the next logical step of removing the dollar as a reserve currency would be an Anglosphere plus Japan digital currency, where regional players would secure their own interests in those regions and have a collective. I mean, this is just theoretical and way out of our lifetimes, in my opinion. But I mean, I think it would be a step down to that first, where our allies and the U.S. would jointly have a digital
currency block.
Yeah,
digital currency block.
You know, running through all the scenarios, in my opinion, that would be the only thing that would take the dollar, that would dethrone. I mean, the dollar would still be a part of it, but it wouldn't be the main part of it. You know, it would be the sole, unipolar one. But you could have an Anglosphere plus Japan digital currency for trade settlement.
Now, you know what I think the highest probability sort of gray rhino would be out of all this? It would be that if China made overtures toward Taiwan, and Taiwan willingly, right, just said, here, take me. Because I think last year or maybe 2 years ago, I wrote a thread about this, how some of the older guard in Taiwan, and you know this, Tony, right? Some of the older guard that are with the KMT, they really don't like the DPP, because the DPP wants to get away from, you know, the Chinese ancestral roots of the Taiwanese. Yep. So the old guard doesn't like that. And so what if China says, hey, we're going to take you? And then what if Taiwan says, here, take me? To me, that is much more worrisome than an amphibious takeover of Taiwan, which I see as very low probability.
Yeah, exactly.
Yeah, I think that is the most likely scenario of the scenarios of China taking over Taiwan, right? It's a mutual, but, you know, with the DPP in power, and, you know, with DPP as a sizable political party there, It's a North versus South issue. For people who don't really understand, KMT is largely North, DPP is largely South, and DPP comes to power when their policies really align with people in the North from time to time, right? And so that's how the DPP gets into power. The DPP is much more nationalistic and independent than the KMT. So
that would be pretty risky. I mean, for the United States, if it didn't intervene in some which way, because then you could talk about North Korea and South Korea unification and then siding with the Chinese at some point,
right.
which is not out of the realm of possibility,
right.
in my opinion.
Right.
You
okay.
know?
So let's just can we agree? Is the CNY, is it eliminated for the next probably 20, 30 years?
Yes.
Do you think it's eliminated, Michael?
I think so. I think so as well.
Okay.
I was on a different podcast earlier this week, and I keep alluding to this interesting podcast that Andrew Hunt out of the UK did, where he did analysis on 36 Chinese private banks, and his assessment is that there's a $4 trillion liability gap that's not captured in the balance of payments. China is much more levered than the U.S.
Absolutely,
but it's hidden.
Yep.
It's just hidden behind this opacity curtain. That's exactly right.
Doesn't look good. So if we push China out, say 30, 40 years before they're a contender, and they may not even be, they may be too old by that time, because there really isn't immigration to China, right? Except for from North Korea and maybe a couple other places. So, we push China out. What about Europe? I mean, will we have Europeans, aside from Ralph, in 30 years? I mean, will we have the demographic age of people who can actually work and contribute, to the economy in 30 years?
They don't have a functioning military and solely reliant. Their banks are solely reliant on the U.S. at the moment. They're insolvent, in my opinion.
Yep. So yeah, that's a good point. If you can't defend yourself, and if the demographics continue to get worse, they won't have people that will defend them, the area. So if you can't defend yourself, you can't have a functional currency, right?
Well, I guess that was a little bit an unintended consequence, and this is something Europeans hate to admit, but of course a lot of EU policy was kind of this dirty secret. The United States were constraining China and Russia, and the Europeans were trying to make deals with them. If you think back, I mean, the entire Russian pipeline network to Europe was built in the 1960s. Yeah. So this was, and I think what Albert also mentioned, and kind of psychological effect was a certain form of infantilization, right? This idea that military conflicts simply are a thing of the past. So in many ways, I see the biggest security risk for the United States. I mean, I don't want to over dramatize it, but I see it almost more in Europe than in China or elsewhere, but not because of an actual military conflict, but the commitments to Europe for cultural and historical reasons, that this is going to drag down American capacities. I mean, we'll see how this is going to work out. Yeah, but the European idea, and we hear it again, Europe will now rearm, and the Zeitenwende, the new times they talked about in Germany. If you look at what's actually happening, it's just not happening, because they know that the populations don't really have an interest in that.
Yeah. Okay. So it's not China, CNY, it's not Euro. What else is a viable? It's not Japan, right?
This is what's making me allude to the fact that I think that an Anglosphere plus Japan digital currency would be the only logical step, next logical step. Just in my opinion, I just can't see anything else out there. The Swiss franc's not big enough. The pound is, I mean, not a relic of what it was. I mean, without any actual, alternatives that we can discuss. Well, I mean, what's out there? Nothing's out there.
And by the way, all these like newfangled ideas of having some sort of pan global currency backed by commodities. But you know what? John Maynard Keynes backed the Bancor during the battle for Bretton Woods. Harry Dexter White backed the Unitas. The SDR was tried and failed. The U.S. dollar is that pan global currency.
Sure.
It is. I mean, I keep arguing with these gold, backed currency people, and I'm like, what would stop me being the dictator of Albania of spray painting some lead and saying, "There's my gold," but you can't really look at it. You know what I mean? It's just there's no nation gives you a transparent audit. So how could you even have, a currency based on such a thing? It's just silly to me, in my opinion.
Ralph, jump in.
Yeah, and I think one of the things where this is what Mike did so well in his paper that he presented at West Point, right? I think we have to look at kind of the structural conditions. And in many ways, the United States have the occasional incompetent administration, but their structure is still more sound than any potential competitor, definitely more than Europe. And I think if one takes a closer look, they're also structurally at the moment more sound than China. And in the case of a real conflict, I mean, these things really, really matter. And, besides all the rhetoric.
In America, we expect our politicians to be dumb, and we just work around that.
Yeah, I mean, in a perfect world, the Pentagon would be working with this Treasury to weaponize the dollar against any adversaries. I mean, that's something the Pentagon's never really understood or really looked at, is like you can place your adversaries in a certain position, being short commodities, short food, and you can really strain,
Bingo.
strain
Bingo.
critical. You can do that.
That is, by the way, that is the premise of our paper.
Yeah,
our paper is literally saying that rather than rely on overt sanctions that basically cause everybody to look for alternatives to the dollar, that we're at this really interesting macroeconomic window where a strong dollar policy inflicts asymmetric pain in our largest geopolitical adversary.
Yeah, it's an absolute logical thing to do. And on top of that, you not only do you have to use the dollar, but you can now use derivatives of the dollar, specifically grains. I mean, there's only 5 companies in America that control the world's grain. You can call them up and cause problems for the world, or for China, for Russia, for any nation you really want to target, if you really want to get down to that level.
Yep.
And by the way, it also kills 2 birds with 1 stone, right? Because it basically exports our inflation problem, because we are in a domestic fight against inflation.
Okay, that's a great idea. Let's do that. Great. Okay, so let's just call this new currency TBD. How about that? Because sure. I'm not really sure what to put in there. There are a lot of cheerleaders, as you guys have pointed out, trying to push other things forward, but I just don't see the case for them. And, outside of just suspending reality, I just don't see the case for something else right now. I don't say that as an American. I'm not necessarily trying to kind of represent for the dollar. I just don't see the viability of other options right now.
Yep.
I would be the first one waving the red flags if there was an actual alternative out there.
Oh, there was one thing I was going to riff on, Albert, what you were saying, or Tony, what you were saying in terms of our politicians being idiots and whatnot. So my view on that is that it's because of the geographic endowments that the U.S. has that's enabled our federalist free market system to arrive and to survive. Because if you think about it, right, if you're China or Russia with unbelievably shitty geography, it takes an autocratic system to try to hold that bucket of bolts together, to paraphrase Han Solo.
Yeah. Why would you want to own all that land if you're Russia? Like, why do you want to own the East? Why do you, I don't get it. I mean, it's just hard to keep it all together. So that's a great point, Mike. Okay, great. Hey, let's go from talking to the dollar to talking about the dollar. Okay, so Albert, you put a tweet up earlier this week saying when the dollar started breaking upward, you talked about expecting DXY to hit 112. So it's kind of we're heading back to where we were last year, I guess. So can you walk us through that reasoning? And you talked about turbulence incoming. Can you talk about what that turbulence is?
Inflation. It's back again. And as much as the Fed doesn't want to admit a mistake, they've absolutely created policy mistakes and allowed inflation to rear its ugly head. I don't want to leave it all on the Fed. A lot of it has to do with Yellen's actions and what she's done with the dollar, and then bringing it up and bringing it down. I mean, this goes to Michael's point of the weaponization of the dollar. Is Yellen takes the TGA and she's in charge of dollar policy. She can take the dollar up, and what she did, and it drove all the liquidity in Europe back and Asia back into the United States, which kept our markets propped up.
Sorry,
and then once the dollar came.
Can you just, for people who haven't watched this before, can you talk about what the TGA is and the authority?
Well, it's the Treasury General account, and she can use it in many ways. But basically, it's injecting liquidity into the economy.
And how much? At what scale has she done over the past, say, 9 months or something?
Prior to the midterms, she was doing about 160 billion a month.
Wow. Okay,
that's a lot.
And when you say injecting, where was that going?
Well, I don't know exactly where it was going. I mean, that's not really clear, but she was absolutely using it, and I'm sure it's been dispersed throughout the economy and whatever sectors that she needed to send it out to rally the markets, and she did a good job. I mean, the markets have stayed up here over 4,000 for quite a long time, and we don't really deserve to be here at the moment. The problem that we're having here, now is, as you rally the markets, now commodities start to rally. I mean, Europe was in a zombie status. China has been, in lockdown, for the most part up until about. Yeah, I mean, they're doing just staged opening.
Yep.
But as they reopen, inevitably inflation is going to come back. Wage inflation has been persistent. That's not going away. I mean, honestly, the workers probably deserve wage inflation after 40 years of getting nothing. So, I can't really blame them on that aspect. But again, we're sitting here with a hot PCE number today. It looks like CPI is probably going to be sticky again next time around, and the Fed's going to be talking about 50 basis points when they, previously the markets were calculating that we're going to do a pause or a pivot later in the year. That's just not happening.
A couple of meetings.
No, so I mean,
this honestly feels like Q1 of 22 to me. The whole setup right now feels like Q1 of 22.
We're right back where we started, Michael. Right back where we started because of Fed policies. They've done nothing to correct the situation with inflation.
Okay, so what's going to happen to drive the dollar up? Yellen stops spending out of the TGA, or doesn't spend as much, or Fed policy, all the above? What happens to contribute to that?
I think it's going to be a combination of Fed policy and then the ECB, the Europeans being hawkish themselves. But I think that we're looking at 75 basis points, probably going up to 5 and 5.75 on the Fed funds rate by the end of the year, maybe even 6. I don't think they can go over that, but I mean, that alone should take the dollar up to 112. 115. I'm sure they can. But taking the dollar over 115 to 120, you're going to start causing massive problems the rest of the world. You're going to start breaking things.
Can I ask Ralph a question?
Absolutely, sure.
So Ralph, I'm curious. So like, I agree with Albert's thesis, and I'm, when I look at the inflation prints in Europe and in the UK still so high, that gives me a little bit of pause, right? Again, on betting on the dollar continuing to rise, except when you look at the state of the economy. And so I'm curious how you see that, because I believe the last UK GDP print was very close to skirting the zero bound. So how much more can the BOE or the ECB really do?
Sorry, before we do that, let's move into Ralph's section, which is inflation's hold on Europe, right? Which is exactly what you're talking about. And so, we saw Austrian CPI come in at 11.2% year on year. When was the last time that happened, Ralph? I mean, what we've seen over the past few months, maybe, I don't know, 40 years ago or something.
This was before I was born, and so this has been as a significantly long time ago. The problem is, despite what the ECB does for European politicians, it's always the 1930s. So the answer to the economic problem is that it must be a demand-side problem. So every time the ECB hikes rates, the government comes in with fiscal expansion. And Austria is the best example for this. Pretty much everything that would have been caused by higher rates has been softened by government spending. And now people expect that government spending to happen in the future, which is they very slowly or not at all change their behavior. So the idea to kind of, pull money out of the system due to high interest rates is not working as expected. I mean, we saw it in Germany It was when we met the last time, right? They said that there was actually slow growth in Germany in Q4 2022. Then they said, that was a slight contraction of 0.2. Today we got the second revision that is actually, it's a contraction of 0.4. And that's mostly because there was government spending. Otherwise, it would have been significantly worse. And I think this is really the problem we are running into. So every time the ECB tries to hike rates, governments will jump in with their own fiscal policies trying to soften it. And what of course happens as a consequence, Europe is losing its industrial base. So supply side politics, which would be necessary, they become more and more difficult. I mean, Tracy on the last weekend did a great job in kind of just listing all the aluminum smelters and all the heavy industry that has been closed down. We heard today that Germany's chemical giant BASF is shrinking operations all over Europe. So at some point, you cannot just turn this back on again. So I'm very, very worried about the structural health of Europe. And or if we look at R&D and spending, right? I mean, out of the top 10 R&D spenders, there is one European company, which is Volkswagen, but all the other companies, most of them are American and some of them are Asian. But Europe is losing kind of connection to all of this. I mean, just as a challenge to you guys, I mean, name one groundbreaking innovation or one groundbreaking area in, let's say, the high-tech area where Europe or European nation was on the forefront in the last 20 years. Nothing comes to my mind.
Well, ASM lithography.
I stand correct.
Okay, outside of Holland. Holland, outside of the Netherlands, right?
I mean, Ralph brings up a great point, and one I usually harp on a lot is whenever you have political policies intermixing with economic policies, you have a problem, right? Because politicians want to get elected, and their terms are a lot shorter than economic policies need. You know what I mean? That's just the reality of it. I mean, the Germans, they say they're tightening things up, but then they give 80% of their population 80% of their paycheck to stay home. That's not going to help.
But Albert, that's where the
by the way, all this, right? All the slowdown in BASF and all that you're talking about, Ralph. This is with an extremely benign weather backdrop this year.
Yes.
that enabled TTF and NBP to collapse. So
yes,
huge benefit. Yeah.
No, and I think there are two other very important issues that particular European politicians don't get, and that you, Mike, has also talked a lot about, which is there is this weird idea that if Europeans and Americans stopped drilling and supplying the world with fossil fuels, that somehow the prices will go down. But exactly the opposite is going to happen, because we're still going to consume it. We just no longer produce it, which is great for all the non-European and non-American producers. And the second part, what I think Europeans still don't understand is there is still this idea that the world will go back to as it was, let's say, 10 years ago, like very early on. But even if the war in Ukraine should stop, right? It's obvious that there is a new kind of industrial policy happening, that friendshoring, that reshoring is going to happen, and that will push upward pressure on prices. And Europeans at some point, they're going to feel this. I mean, we see it with Germany. Europe is increasingly becoming a continent that has to import more and more, but everything we can export is becoming less and less. That is not a sustainable model. I mean, unless we say we just become the world's biggest retirement home / tourist destination. But other than that, it's really problematic.
That's interesting, because I remember Valina and I were talking about what Europe should do, and it was definitely bring back your supply chains to Eastern Europe, North Africa, closer to home. Something Europe can drive in investments and actually hold it close to their hand here. But they just have not done anything. It's just they want to rely back on the old guard of, let's go to China and grab their market share. Meanwhile, Africa is sitting right there. That's going to have a bigger population in the next 25 years than China, and younger and hungry for innovation and products, but they haven't capitalized on that.
Yep. No, it's like an inversion of the 19th century, right? When there was once a time where Europeans looked at the map and saw everything as a potential part of the empires. Now it's like they barely look at the map at all. And I think it shows in their economic policies.
Yeah. Just going back, Albert, to what you were saying about the short-termism of governments, and we see this at least in the West, the bureaucracy is supposed to be the part of government that helps the office holders to see the longer term. But the quality of our bureaucracy has deteriorated so much over the last 20, 30 years that they just don't care. They just don't.
They don't care, and I can blame
they
them.
just don't care.
I put a lot of blame on social media right now. I mean, all these politicians get on social media and do catchphrases and this and that, and everything's in the real and now and immediate and so on and so forth. That they don't, 6 months down the road, it's like they don't care. Simply, they don't care.
Yeah, Ralph, one of the things that you tweeted out earlier, and I know Michael found this really interesting, was the bankruptcies in Europe. This was a Eurostat chart that came out looking at the rate of acceleration of bankruptcies across industries. Can you talk to us about that a little bit?
Yeah, I mean, there's a couple of factors now at work. I mean, one is that a lot of these companies, it's kind of what happened in the financial sector during the Great Recession, where you had these zombie banks. I think a lot of this is now also happening in the real economy and the industrial economy, where many companies have been propped up during COVID. They have been propped up by very low interest rates, and this is now coming to an end. I can only speak for Austria, but there are many companies, of course, also have loans, some of them with not fixed interest rates. And of course, they are squeezed now. So they have huge problems in refinancing themselves. And I think this is just the beginning. I don't share the optimism. I'm kind of a little bit with Albert here. Kind of everybody who says that either inflation is going to be over, there is no trustworthy indicator for me that inflation is ending anytime soon. And the second one is this idea, and you mentioned this also, Tony, in one of your tweets, right? I think the IMF forecast for growth in the Eurozone are too optimistic. I think there are many factors that are not yet calculated.
Absolutely.
And of course, the big elephant in the room comes from also, Mike, that you mentioned a lot, is of course energy. I mean, energy, like everybody is like, oh, the energy crisis is over, but that's only because elasticities in the energy sector are very low. So yes, if there is a lot available right now, it immediately affects the price, but there is no guarantee that it's going to stay like this in the medium and long term. And if I look at European policy, I think that it's going to get worse before it gets better, seems more likely. And you see gradually signals like this coming from the International Energy Agency and from Goldman Sachs. So all of a sudden, the optimists of 2 months ago say, well, it might be more problematic than we anticipated it to be. And one part of the story is something that also Mike mentioned. At some point, I think we have to say this also openly, is this obsession with ESG and an energy transition that makes the promise that by 2030, 2035, the European economy is going to run entirely on renewables, which is an unrealistic, and if one would be more outspoken about it, which I think is a ludicrous proposal that cannot be fulfilled.
I call that the Gretaverse.
The Gretaverse.
Yeah,
that's excellent. We'll all be driving.
And just
go ahead.
As a quick last point, if we want to put real numbers on it, I mean, the German government alone, the Europeans spent almost $1 trillion on energy last year. The Germans spent about $465 billion only on energy, and all it got them was a declining economy by 0.4% in the first quarter. So what is their strategy? If they want to do this again next year, and we see it in the spreads, at some point markets are going to look at Germany and say, listen, like, your reputation has been great for the last 40 years, but can you really still deliver what
Germany's got a lot of they've got a lot of capacity for fiscal spending. I just think they haven't opened up as much as they need to yet. I mean, I think that's part of their.
They can't. They go into a doom loop of inflation. Rises inflation.
Yeah.
Then they need to quell.
And what happens when Mother Nature doesn't cooperate next time around?
Yeah. Right.
And that's.
They got lucky this
year.
And
that's really I think all of you are right. Tony's right. I think there is still wiggle room, but what are they doing with the money, right? Instead of making capital investment and saying, okay, we saw the problems, to do something, they pretty much put it all into welfare checks. I mean,
energy
for
subsidies.
The people, but exactly.
Yep.
Encourage people to spend more and more products that are less and less available. So what's the only thing you get? It's inflation. So it's really, I don't know what the politicians are looking at.
Speaking of that, let's talk about everyone's favorite central banker, Madame Lagarde, and the choices she has at the next meeting. she said earlier this week that they're likely to raise by 50 basis points at the next meeting. So what we've seen, the last two rate hikes were 50. We saw a couple of 75s in September and October. So, there had been a hope, like there was in the US, that things would, not loosen or ease, but at least slow down on the rate hiking front in Europe. But with the pace of inflation, it almost seems like they don't really have a choice, right?
I would agree.
No.
Yeah, I think they don't have a choice.
Okay.
Well,
that's a
well. I think they're going to try, but what I really think, reading between the lines of all the tough talk with all the world central bankers, what I think everybody, if you look through to their actions so far, I think everybody has been holding their breath, hoping that the Fed is going to engineer a global recession so that they don't need to be the ones to have to administer the medicine. But the problem is, and I alluded to this in a thread a couple of months ago called geopolitical mosh pits, right? We're in this every man for himself world where everybody's got a domestic inflation problem. And so what the Fed does needs to, the United States interests need to take precedence over necessarily worrying about other central banking interests and vice versa. But the problem is that right now, right, the US economy is still humming along, whereas the rest of the world's economies are faltering pretty badly already. Yep. And so your guess is as good as mine. I just think that Lagarde's job is really, really tough, because there's no pan global bond market really. So she's got this ridiculous TPI mechanism where she's trying to hold together sovereign spreads, and the ECB's bond purchases as a percentage of GDP already at like 60% compared to the Fed's at like 34%, compared to Japan's at 120%.
Right.
I'm glad you mentioned that, Michael, about nation states' interests, because it's one of the things I harp on, especially when I talk to younger people and they ask me about geopolitics. Is like the first thing you have to look at is a nation's self-interest, and there's no better time than right now to prove that example, and you're seeing it firsthand. All these nations, they have to have their own self-interest at heart before anything else at the moment.
And that's normal, right? That's healthy.
Of course,
and that's normal. I think that it's so silly when, we have to consider other people. Of course, there's a time for that, but it's not right now. You have to really look after your own country, whether it's India, Germany, US, China, whatever. It doesn't matter. You have to look after your country first.
Mm-hmm.
Ralph?
But that's I think exactly what Albert just said, and that this I think makes it an even bigger ticking time bomb for Europe. You have now this absurd situation that politicians of member states of the EU, they want to continue to do populist economic policies, while when they fail, they can put blame on the ECB. So technically, what Lagarde probably should do before the next announcement of a rate hike is to go out and say, listen, cannot clean up the mess that you guys make in the domestic economic policies. And of course, this is not something that she's probably going to say, but that's really the dilemma. The US almost have an advantage with something that Albert is criticizing all the time, justifiably so, with kind of the chummy relationship between the Fed and the government. But at least it all happens within one state, right? It all happens within one country. And also going back to what Mike said about the federal structure. But in Europe, it's kind of the worst of two worlds, because the ECB tries to fine-tune the economic problems via interest rates, and the politicians that just go out and say, oh, I know you have to pay more on your loan, but here's an extra check for you. So it's you could almost say it's like the nation states are mocking what in a sense what the ECB is trying to do.
Yeah, Mike, you said that Lagarde has a very hard job. I actually think it's very hard because it's very easy. There really isn't a lot of choice there. It's hard having the wherewithal, I guess, to go through with these things that are probably going to end up being pretty painful.
Now, by the way, to steel man the other side a little bit, okay, so there's some that say that, okay, well, the Fed, because we have all these bilateral currency swaps, the Fed is going to take care of all its friends, right? And so we actually saw a little bit about that. I wrote a thread last year about how when the yen, for instance, started its first approach towards 145-ish, 140-ish, I got some talk from a very well-placed source that basically the Fed, in conjunction with the BOJ, was allowing the BOJ to essentially buy US 10-years to basically kind of paint a picture, to stymie the depreciation in the yen, okay? So then so then we saw this big risk rally, remember, when that happened and the yen corrected back? Well, then I get a call from the same source saying, you know what? My people are telling me, my people at the Fed are telling me that, you know what, they can't hold the line anymore. They're going to basically stop. That's when you saw the yen go to 150. You know, so right now we're in this sort of, you know, everybody calls it the transitory Goldilocks, where, you know, things kind of came down and you've got Yellen's games with the TGA, et cetera. But I really think, I think I agree with everybody on this call that all hell's going to break loose again when the dollar starts approaching 110 again. And this time, you know, maybe there won't be that sort of bilateral help.
Yeah, Michael's absolutely right. I heard the same thing about the Fed and the BOJ. On top of that,
I thought you were a source, Albert.
Right, but because I talked to you about it a couple times. But they do the same thing with the Aussies and New Zealand and Canada. They give them marching orders, say, hey, we're going to paint a picture over here, so gives us room to do something over here, and so on and so forth. But like I said, that's the Anglosphere and plus Japan. That's why, one of the things that led me to believe is like next thing for a currency would probably be them. And they already work together as it is. Whether the market knows it or not, they talk and they work together.
Yeah. I mean, I think it very often comes back to this very point, and this is something that Mike also mentioned before, right? Is that, of course, what underwrites the dollar as the global reserve currency and the most powerful currency is because the United States have the most powerful economy. Whatever problems they have otherwise, their economy in many ways is still the most dynamic and the most innovative. And this is what I can fear about the European situation is, we can criticize politics, we can criticize the ECB, but I think we also have to criticize European industry itself, because like in Germany with heavy industry, like they never say anything, right? They could get together and say, like you hear occasionally a voice there and occasionally a voice there, but there is no concerted actions by representatives of the industry to do something about it. And my suspicion is because they kind of made it comfortable for themselves, because they know they get government subsidies. They might have to produce less, but I'd rather depend on the biggest monopoly there is, the state, than on those pesky customers or those potentially unsecure international markets. But that's a very short time perspective. I mean, this is not something you can do forever. And again, the only reason why Europe could do what it did was because they could rely on the United States to provide from, with their blue water navy to everything else. They provided the framework in which Europe could do what it did. But as this framework is changing, I mean, I'm not, because Albert would never talk to me again, I'm not going to move all multipolar because,
you would.
because I don't agree with that idea either. I don't agree with that, but it's definitely changing. I think Americans are becoming more sensitive to, listen, guys, you have been free riding now for 60 years.
Oh, yeah.
It's time to do something yourself.
Yeah.
So
and
Ralph,
sorry. Go ahead, Mike.
So Ralph, you touch upon another theme that we raised in our paper, which was, again, it goes back to geography, right? Because because the U.S. has had these geographical advantages, it's allowed its military strategy to focus outward on force projection and develop that blue water navy, right? Mm-hmm. So when you compare and contrast that to China, right, where you could argue that they've got green water superiority within the first island chain by virtue of 350, vessels versus our 270, but the gross tonnage is 1/3 that of the U.S. Navy. They cannot force project, and so if you talk about real force projection and geopolitical power, right? To steelman the other side, what would cause the U.S. to cede its hegemony? Well, it would be that scenario where China somehow decides that, hey, you know what? We are going to subsidize global maritime security for the good of the global commons. Do you see China doing that? I sure don't.
not for at least a century. And it takes a lot of money to build up a navy, and then you need combat experience. And then on top of that, any kind of conflict in Taiwan or the South China Seas shuts down their ports. China cannot afford to shut down their ports.
That's right.
I was going back and forth with Elbridge Colby about this. He's a military guy, and I love the guy, right? But when it comes, you have to look at the economic aspects of it concerning the dollar and China's food insecurity problems and their economy in general. I mean, if they invaded Taiwan and shut down those ports and their economy collapsed, Xi would be dead in 30 days. They
China, there's the little issue of China having to import 80 to 90% of its crude, all of which pretty much comes through the Strait of Malacca.
Yeah, I mean, but this is something that it's really important for you to talk to the military and get that USD thing out there and talk about commodities and talk about the economic ramifications and say this 100%. Is a significant deterrence for China to invade. This is a significant deterrence for any nation to really go after, because there's just no money around. The economies are really weak. So this is, it's a great thing that you've done.
Thank you. Well, I hope you guys enjoy the paper.
Yeah.
Sorry, just going back to what you said, Mike, about China not having the Blue Water Navy really to protect trade and waterways. They have tried that with the Belt and Road. It's been less than a decade, but it's kind of been a failure since the start of it. So
let's, I mean, the thing with Belt and Road, right? If you think about what it is, they are expending tremendous amounts of national treasure to recreate what the U.S. is naturally endowed with.
Right. Yeah. It's very inefficient. It's very inefficient. It's very corrupt.
And they're failing at that.
I sat with those officials when I was trying to put in a tendering system for the Belt and Road. Okay, transparency. I asked them, how much are you comfortable losing to corruption? 20%, 30%, 50%? People just shrug shoulders. Nobody wants to even look at those basic transparency issues, much less understand that spending is incredibly wasteful just for some sort of desperately seeking some sort of relevance with third-tier countries, right? I mean, no offense, they're great people and all that stuff, but they are not necessarily economic powerhouses, and they're not necessarily strategically placed. So it's a big problem, and corruption is a big problem in those places. So not only are they going to have to buy off Chinese industry to go in these places to build, they're going to have to buy off the officials in those countries to get the infrastructure done. So, okay, guys, let's bring this back to Europe, since Europe is kind of our last group. Ralph, I get the sad sense that, when, Mike talks about dollar resurgence and Albert talk about dollar resurgence and, inflation is pushed on the rest of the world and these sorts of things, Europe is, and European industries show this as well. Europe isn't really a growth engine, of course, right? So is Europe the worst placed of the regions in the world generally when we see a dollar resurgence and inflation and kind of these coming headwinds?
Probably not. I mean, I remember I asked Albert this, I think almost a year ago once on Twitter. I think that the ties between the US and Europe are still so strong that I could imagine that the US would be willing to adapt their policies in a way to protect Europeans from the fallout, or to find some ways to support them. But
you think
overall,
they would?
it can always.
Okay.
I think that. I mean, again, maybe I'm putting kind of too much hope in the US there. Maybe this is wishful thinking on my part, but I think that these ties are still strong. I think this is the US. I think still view. Yeah, I think they still view Europe as part of the national interest. Which, by the way, to be very clear, I'm glad of. I mean, what can something that bothers me really is, I think the best thing Europe could do would be to place itself as Athens to America's Rome. Kind of know, I play second fiddle to the strongest player on the block, but don't try to be, as again, Albert, we've discussed this many times, kind of to participate in this fantasy of the new multipolar world where you will balance the US in a quasi agreement with India and China. I mean, this is all fantasy. None of this is real. When push comes to shove, I think the US are still the best bet for the Europeans, but there's to be a kind of a psychological problem in Western Europe. I think this is another thing. Of course, I think the Eastern Europeans, particularly Poland and others, I think are much more willing to attach themselves or kind of align themselves with the US. I think Western Europe, and that it's mostly cultural / psychological, right? That they still wish to be kind of a counterweight potentially, to the rude Americans and the uncultured Americans.
We're definitely rude. We'll take that. So, okay, guys, we've been an hour, so I appreciate all of the thought you put into today. For everyone watching, please don't forget about the promo, the Friends of Tony for promo, first 25 subscribers. Guys, I really appreciate your time. Have a great weekend. Thank you very much.
Thanks, Tony.
Thank you for doing this.
Thank you.